I can't remember a Fed meeting, Ellen, in recent memory anyway, that sort of moved stocks the way this one had. Is that a sign that, to Steve's point, the market was looking for more, or maybe that the Fed screwed up in its pre-meeting communication? We're not supposed to get these kind of moves.
Yeah, I think that just because the Fed was dovish, I mean, that's it. Hands down, the Fed was dovish. Though they were not, as Steve pointed out, they weren't as dovish as the market had expected. Right? That's not the Fed's fault. The market shouldn't have been expecting the Fed to promise no rate hikes next year or just one rate hike. And it did fall on deaf ears, some of the points that Powell made. He said again, as he did back in March, the dots are not a consensus. That's not the path that we see. What we see is in the statement. Now, the statement says some further rate hikes. That's over the medium-term outlook. For all you know, that ends up being one a year. We just don't know. And so Powell made an effort to try to stress the uncertainty around what they're going to do going forward. But yes, it fell on deaf ears. I characterize this as tough love, right? The market shouldn't be pricing for disaster next year. The market should be pricing for the good times are over. We just went through the year of tax stimulus. You've absorbed the delta from that. We now move into the payback period. Very tough comps for earnings, tough comps for margins. Global growth is slowing. You have to take that into account. And so you do have a lot of financial conditions tightening from that. The market needs to reset to some new equilibrium in a world where growth is not juiced by tax stimulus.
Hey, Brian, I think you raised an interesting point, though, about communications. What happened yesterday was not very far from what I expected. I think it was interesting to see the market price in one rate hike for next year when there was no way the Fed was going to change its forecast and go from having forecast 3 for 2019 down to 1. That was always too big a move. So it raises a question for me about communications. Well, maybe I could throw this to Ellen. Ellen, there's two pieces of the Fed's communications. One is telling folks what's going to happen. But the other aspect, and maybe the one where Powell is falling short, is convincing them that that is what should happen. And I think that Powell may not have made the case, at least to the market, when it comes to the need to reduce the balance sheet in a way that is not attuned to what's going on in the economy. And second is the need to continue to raise rates. I don't think he has the market with him on either one of those scores. Yeah, so I agree. You know, you had 30 minutes to adjust the Q&A however you saw fit in order to drive some of these points home. And I'm glad you brought up the balance sheet because that really was the biggest source of surprise for me. Because,
by the way, Michael Purvis, at the beginning of the show today, said the exact same thing, that it wasn't the rate hike. It was the balance sheet commentary that really moved stocks. Right. So if you if you look at the timestamps from Powell's transcript, and you look at the time that the market really took that leg downward when he was speaking, it's when he said the balance sheet runoff is going smoothly. Now, before that, he had said in November it was going very well, which was concerning then. And so we thought, well, for sure he'll revise that, show some more flexibility, at least that they'll follow financial indicators closely for signs of stress to guide them on the ultimate size. We didn't even get that much. It was almost like a no questions asked, the balance sheet continues to run off. I'm sorry to interrupt, but I had no expectation that the Fed or Powell were going to amend the balance sheet plan. And because they have been steadfast on that. I've asked both Chair Yellen and Chairman Powell, hey, are you telling me that if we start heading down, that you're not going to change the balance sheet? And they have said twice now, at least, that they were going to. So I don't know. It's one of those things where Powell somehow is not controlling expectations. I get what you're saying, and that's a different discussion as to whether or not they ought to be amending it. But the idea there was an expectation out there that they might suggests to me the Fed is not doing a good job in controlling expectations. Right, but not amending it. No one, I mean, I doubt anyone expected them to actually say, now we know when the end and the end is near. Just simply give a nod to the fact that you are following financial conditions closely for signs of stress that the balance sheet may cause